Can you talk to me a little bit about with this specific strategy? And we're going to go through a couple examples, which I think are really, really interesting. But how do you sort of combine the macro, like what is happening, all the question marks we experience versus specific levels to put to work on a specific trade? How do you bridge that gap?
Okay, so the way I approach things is my first step is spend some time understanding the markets, develop a long-term bias of where the markets might be heading this year. So at the highest level is that a rising tide lifts all boats. So you have to first figure out the tide. So, and that's what I meant by market weathers, right? So first of all, whatever your understanding of the market is, whether it's macroeconomic environment, geopolitical issues happening, wars happening in the Middle East, inflation, high inflation environment, high interest rate. So based on that, you form a overall view of the market. That will give you a bias, whether you are bullish or bearish. So once you have that bias, then I filter down to the next level where I go into individual sectors. So because the thing is, the sector rotation is a real thing. So there's always money flowing into certain areas of the market. So then you need to figure out which sectors money is flowing into. And one of the things I think you have talked about in your videos is, RRG charts, sector rotation graphs. So I find them really interesting. I have implemented my own way of figuring out which sectors money is flowing into, but I do pay attention to that a lot. So then I select the top performing sector. So market first, then individual sectors, find the strong sectors, then go to the stocks, and then look for technical setups in those stocks.